Thank you, and thanks everybody. So I'm going to take you to Newfoundland's next gold mine. So this is our, Marathon is 100% owner of the Valentine Gold Project. It's in central Newfoundland. Newfoundland's a great place to do business, and we'll talk about that. We are the largest undeveloped gold resource in Atlantic Canada, so it's currently standing at 4.1 million ounces in all categories. 3.1 are measured indicated, and that's pursuant to a resource update that we brought out about a month ago after about 60,000 meters of infill drilling last year. We're known is this on? Oh, just stand closer to it? Okay. Right, so what Marathon and Valentine is known for is this big 20-kilometer long trend. It's shear zone hosted gold in the middle of Newfoundland. So the upside story here is very important to you, and I want to take some time to talk about that as well in the exploration. But we're committed here to building this mine. We're in the middle of a pre-feasibility study, which we expect to have out relatively shortly. It's on schedule. And we'll talk about that and our vision for the development of this project. But this is an open pitable gold resource at surface in the middle of Newfoundland. It's high grade for an open pitable resource. It's open. We've got a road. We've got a power. It's a very feasible proposition here. That graphic is something that we use to illustrate the investment proposition essentially from Marathon, because that is the growth in measured and indicated ounces of resource of this project since we got started as a company back in 2010. It's been a steady increase in gold in the ground through drilling since that time, and very much as we pursue the development of this asset, we want to keep that story going. We're still drilling. Exploration is a big priority for us. We want to keep that trajectory going. And of course, Marathon was originally Marathon PGM to keep on the platinum group metal theme here. Sold to Stillwater in 2010. These are the gold assets that were spun out. So Phil Walford, my predecessor, Sherry Dunsworth, VP Exploration, have done great work to bring this project to where it is today. So here we are, central Newfoundland. We're just southwest of the Buckens mine, one of Canada's most famous copper mines. Closed in the 80s, but produced a lot of the copper used during the war. And then more recently, the Duck Pond mine, eventually of Teck, which closed about 4 years ago. So this was a base metal mining district. The exploration here was actually for base metals. It's a VMS camp. Noranda were in here in the 80s and 90s. But this is a shear zone hosted gold deposit. This is a large bulk tonnage, open pitable gold resource. It's a different beast for this type of the world. That's where we are, just adjacent to the Victoria Reservoir, which is one of the large areas of hydroelectric development in the southwest of this area. And those photographs are from 2 weeks ago. That was community consultations. We had 380 people come out in 6 meetings in 6 communities over 3 days. In the course of those meetings, I think we had one question about tailings design, one question about water, one question about dust, and we had 15 hours of questions about jobs. So this is an area of very high skills, very high employment capacity, and everybody is working elsewhere in Canada in the resource business. So the desire to have this type of project, 400 jobs in this location, is very strong. So very strong stakeholder and political support in the province to do this. So geologically, we're on a 20-kilometer long stretch of the Valentine Lake Shear Zone. If you go down strike of us, eventually you get to Matador mining, and if you go up to the northeast, there's other showings up there as well. We've got what we think is the guts of the mineralizing system here. All the mineralization is in the hanging wall. It's extensional vein sets, quartz tourmaline pyrite veins on the centimeter to meter scale. You see them in the top left there. Occasionally along this shear zone in a hanging wall, we have densification of these veins that stack on top of each other and form what we call these main zones of steeply plunging packages of stacked flat-lying vein systems. And so we're drilling down plunge of those corridors across the vein dip, and we're drilling across the structure. We've got 270,000 meters now of drilling into the 2 main deposits, Leprechaun and Marathon. We've got about 2.5 million ounces in Marathon and 1.5 million ounces in Leprechaun. But the whole trend is mineralized, and what we're looking for are the areas along that trend where we've got that densification of veins. This is the resource. That's the measured and indicated vein packages. in Leprechaun at the top and Marathon at the bottom. And if I do this, you see the inferred resources. So we've got about 3.1 million ounces here of measured and indicated and 55 million tons at 1.75 grams per ton. There's about an extra million ounces of inferred, 600,000 of which are in the pit shells. So we don't intend to keep drilling. We put 60,000 meters of infill drilling into these pits last year. We don't intend to continue that process. We feel we've got enough now of open pittable M&I to get started. And we need to put a pin in the wall on those pits for the permitting and the environmental assessment process. But we're open here. We're open at depth in both deposits, and we're open to the southwest, which is, if I can do this, maybe I can, maybe I can't. Oh, no, I killed it. Oh, hang on, there we go. So we're open to the southwest, which is the left of the bottom pit, and open at depth on bottom. Very importantly with this resource, I mean, we are proposing now for this resource to go forward to the first reserve. We're proposing to present this to trustee lenders for mine project finance due diligence. So we put a big effort into the quality of that resource update as well as just the quantity. So compared to the previous update, the 60,000 meters of infill drilling did give us 400,000 more ounces of M&I. We've got a very large number of resources in the measured category. So the important stuff, the stuff that we can mine now in a pre-feas went up. But Table 5 of our January 20th press release contained all of the statistics of the block model. And that was very important for us because we wanted all of that to be as tight as possible. So that we very much understand that as a single asset gold developer in Canada, we're coming along after other stories that have disappointed in the areas of geological control on the mineralization, understanding that and quantifying that. So there was a big effort put into this to make sure that's as tight as possible for us. We brought RPA in. I joined in August, and RPA came on board immediately to do a peer review and a risk assessment during that resource update process. We used Sam Shoemaker at Boyd for the work. And so we've got something now that in all the classic KPIs on the stats of the block model, average grades of the block model versus the composites, CVs, the cutoffs, the threshold restrictions on assays, it's all a lot tighter than we had previously, and we still got an increase in the ounces. So that was a very important part of our story, the quality over the quantity aspect of that resource update. So this is the PEA that exists. This was done in October 2018. So this was the starting point for us for mine development, and this describes a relatively big project. 9,000 tons a day going to a mill, 9,000 tons a day going to a heap leach, 225,000 ounces a year for a 30% rate of return, 13 years, $355 million US capex, $500 million of NAV. So that's a good starting point for us. I'm showing it because the way we're going with the pre-feasibility, and that'll be the scope that we bring in for the feasibility and mine execution, is somewhat more focused than that. We wanted to refine that mine plan. We wanted to bring the capex down. The pre-feasibility, which is, again, about to come out relatively shortly, is being done by Ausenco. And here in the pre-feas, we're not necessarily maximizing the total gold production per year. We're maximizing rate of return and initial capital. So directionally, we've already told the market that heap leach is coming out of the mine plan. It was contributing about 8 to 10% of gold production, but about 30% of the capex. So bringing it out, directionally, we expect to show a material reduction in the initial capital for this project, an increase in rate of return, and the mandate to Ausenco has been to hold the line on gold production and hold the line on NAV. And we're interested, as a company that's going to project finance and develop this, we're interested in giving you the best possible ratio of initial capital to NAV, making sure that's a very financeable proposition, making sure that the ratio of our market cap to the initial capital makes sense as well, and giving you something that is, that hopefully the market will recognize as being something which is eminently developable, as soon as possible. And I think that's what we're going to get. We're taking it as a given that we've got a lot of resource upside here, right? And we're keeping this as simple as possible. We're not worrying about underground mining at this stage. We know these things are open at depth, these ore bodies, but we're not going to complicate our lives by giving you an underground mine plan. This is open pit mining for 10 years plus. And we're giving you a simple execution strategy based upon open pits feeding a single mill with a conventional flow sheet, good recovery of coarse gold. It's like 55% after gravity and 93% ultimately after flotation. Nothing particularly unusual or exotic about the site. No big pre-strip, no rivers to divert, no communities to relocate, no species at risk, no large fish habitats that we're impacting. So straight ahead, simple, easy to finance and build. The schedule was driven by the permitting process. We're in the middle of an EA process at the federal and the provincial level that's, we estimate, about 24 months. It's on schedule. Frankly, our biggest risk probably is schedule related to the EA process, not necessarily because of any technical attributes of the project. We've received all of the guidelines from the federal and the provincial levels for the content of our EIS, and it's all something that we are quite happy to take on. Principally, we're always looking at process risk and schedule risk around just moving the ball down federal and provincial levels for the permitting. But so far, so good. We're on schedule for this. And this calls for us to be released from EA the summer of 2021 with ministerial approvals. And then sectoral permits begin immediately afterwards, breaking ground at the end of 2021, and then first gold pour 2023. We're financed here. We had $34 million at the end of the third quarter. That'll be about $30 million by the end of the year. So that is sufficient financing to take us all the way through to the end of the feasibility, all the way through to the end of the EA process. It also accounts for all the drilling we're doing this year. We're not financed for detailed engineering and early works in 2021, but we can certainly get to the go or don't go decision on this project with current resources. So a little bit about the exploration. Here is a 6-kilometer long stretch between our two pits looking towards the north. So 2.5 million ounces to the right, 1.5 million ounces to the left. That yellow solid body is a 200 ppb grade shell. The area that we're interested, which has jumped out to us recently in the exploration, is what we're calling section 13410. We haven't given it a name yet. It's not a deposit as such, but I'll show you the section for that area quite soon. We're spending about $9 million in exploration this year. We've already started drilling. We're very excited about this area. The area between that section in the middle and Marathon on the right, which is open there, hasn't really been drilled. Those drill holes that we're showing you are planned or in progress. And this area hasn't really been accessed previously because it's soft ground. We've worked out now how to get on there with these big mats that the drills drive onto. So we're going to tell you what's in that stretch along there. And if I go to the next slide, this is what that section looks like. On the left, that's the classic deposit setting for this project that we see at the Marathon and Leprechaun deposits. The yellow are these stacked packages of quartz tourmaline pyrite veins that are flat-lying but form these densified envelopes that plunge down adjacent to the structure there on the right. We've got big mafic dikes, that's the green. Those are important in giving us the brittle rheology for the hanging wall that gives us a lot of veining, a lot of extensional veining. And they also serve to dam up the mineralization. And so we had a discovery hole. You probably can't see that from where you are, but we had a discovery hole that came from top left, bottom right that cut that at the end of 2018 that gave us 6 grams over 49 meters. And at the end of 19, right at the end of last year, as an add-on to the infill drill program, we drilled 7,000 meters here, and we got a bunch of hits. That's the red holes on the plan on the right. One of those holes went down the guts of that section and gave us multiple intersections there. 1.6 over 16 meters, 2 over 9, 4 over 9, 7 over 5, 2 over 15. So on multiple intersections, that's the classic setting that we see at Marathon and Leprechaun. That's the type of intersection that gives us 1.75 grams over a bulk tonnage situation. 300 meters step out from that, we've got 7 grams over 22 meters. So if, we've got 4 million ounces right now in 2 open pitable resources. We're putting the pin in the wall on those. To get to the 5 to 10 million ounce range, we need a third pit. And this area is probably the best shot right now for giving us that third pit. And this is where all of our exploration is going. The scale bar there is 500 meters. The Leprechaun and Marathon deposits are about 1 kilometer to 1.5 kilometers in scale. So there's lots of room here, and we're just really getting started in the drill testing of this area. So in terms of the team, management on the left, board on the right, some of the new faces that have been coming on here recently are all focused on our mission-critical area, our timeline area, which is permitting, environment, community consultation. So we've been hiring a manager of EA, manager of community consultation, communications specialists around community. So that whole area in Newfoundland is getting beefed up in a big way. And you should expect that new faces to appear here as we refresh the team, as we refresh the board, to go to that next stage of mine development for the company. So balance sheet, so as I said, 34 million in treasury at the end of September. We had a 270 market cap a couple of days ago at $1.50 a share, so I don't want to speculate on where it is now. Sorry for the fonts here on the right. There's a large number of high net worth investors or shareholders in this company. That derives primarily from the spin out of the gold assets from Marathon PGM. We were the second best gold developer on the TSX last year at 116% return. There's no pre-production debt here. There's a 2% royalty with Franco, and Franco are also shareholders. But it's a very clean capital structure. There's no strategic shareholder. We don't have a strategic capped out at 9.9%. There's no private equity here. And the game plan here is to go forward again with a very financeable project and a clean project financing strategy. 5 analysts covering us with 5 buys. And that's everything. Time for questions, I think. Thanks.